Hi, it's Terry Ryder from Hotspotting. Tonight I saw something extremely rare in Australian media. I saw a fair, accurate and balanced coverage of what's going on in prices in Australian property markets. And I found it on the SBS World News on television. Something extremely rare where the latest price data comes out and the treatment of it is actually fair and reasonable. What they pointed out on SBS World News in discussing the latest monthly price report from CoreLogic is that while the national average figure for prices in annual terms is a negative one, in 5 of the 8 capital cities, prices are actually rising. And that's an important thing to be pointed out, because most of the coverage you're going to see about these latest figures, as usual, we'll be talking about national property prices. The Australian property price is falling and has done so for X number of consecutive months because they generalise, and in generalising they mislead. The problem is that Sydney is down a lot according to these figures, and that's dragging down the national average. But most places around Australia, the prices are actually up. 5 of the 8 capital cities are up, and in regional Australia they're up. So, to some of the detail in this latest report from CoreLogic, in terms of house prices, Sydney's down 9% according to these in annual terms, and Melbourne's down 7%, and Perth's down a little bit. But the other cities are up. Hobart's up nearly 10%, both Darwin and Canberra up about 5%, and Brisbane and Adelaide are up about 1 or 2%. So 5 of the 8 capital cities are up, and also the combined regional figure is slightly in the positive as well. But despite all that, the national average figure for houses in annual terms is a minus figure, minus 4.5%, primarily because of the weight that's applied by Sydney and Melbourne, the 2 biggest cities. They drag down the national average, even though most places have prices higher than 12 months ago. But even so, an annual decline of 4.5% is actually, I think, quite moderate. That's the situation for houses. For apartments, it's an even smaller figure. It's minus 3%, again, dragged down primarily by Sydney. But given all the screaming negative headlines we've had throughout 2018 about prices plunging and plummeting and all those emotive words that media like to use, an annual decline as a national average of 4.5% is pretty moderate. 4.5% for houses, 3% for apartments. But in most cities, we're actually up higher than we were in the last month as well. And the monthly figures, although I think monthly is too small a time frame to get meaningful trends, but that's what they do. But even on those terms, the latest monthly figures, Brisbane's up a little bit, Adelaide's up a little bit, Hobart's up, Darwin's up, Canberra's up. And it's Sydney, Melbourne and Perth. According to these figures, it's very important to make that point. It's only according to CoreLogic, because we've got other sources. We've got Domain, we've got SQM Research, we've got the Bureau of Statistics, we've got the Real Estate Institutes and other sources, and they all have different numbers. And it's amazing the degree of contradiction there is when you compare one set of figures to another set of figures. And when you put 4 or 5 sources together in a single table, it's just a sea of confusion, because they all have different numbers. Some of them saying certain markets are rising and others saying the same markets are falling. So it's only according to these figures, according to figures from this particular source. They actually have Sydney down more than the other sources. The other major sources of price data certainly have Sydney overall down in annual terms, but not as much, not nearly as much. The ABS figures rather, are less, about half as much. So are SQM Research, about half as much as CoreLogic's decline in Sydney, and a whole lot of other differences. Okay, so according to these figures, in monthly terms and in annual terms, 5 of the 8 capital cities have rising prices. Keep that in mind when you read the headlines in the newspapers tomorrow, if you're a person inclined to absorb newspaper headlines. I actually suggest that you shouldn't, because you'll be filling your heads with negativity and misinformation about real estate. Here's just a little example before I finish of why it's important not to treat real estate statistics as fact, because as far as I'm concerned, it doesn't matter what the source, what the subject, it's all dodgy data to a certain degree. They're all rubbery figures. There's no such thing as definitive figures on real estate, whether it's prices or rentals or vacancy rates, discounting, what have you. But recently I was researching discounting because I've done quite a lot of television interviews. At the weekend I was on the Sunrise program on Channel 7, for example, and I'll be doing television again this coming weekend, and there was an interview with Channel 9 during the week, and one of the subjects that came up was the level of discounting. And the discounting means that the difference between the original asking price and the eventual sale price, and the difference between the two is the discount rate. Now, there's always discounting. Even in a boom market, there's a level of discounting because people always set their asking price higher than they might want or expect to get to allow some negotiating room. And people come in with offers that are lower than the asking price, some negotiation, and they probably meet somewhere in the middle. So there's always discounting. It's a question of how much discounting, and there was some over-the-top media about discounting in certain locations, which was highly inaccurate and badly analysed. But just to show you how misleading these figures can be, in my research for one of the television interviews I was doing, I was looking at some figures for some of the Townsville markets, which is a market that's been down for a few years but has got great potential to return to growth because of what's happening in the economy there. And I looked at the subject of North Ward. Now according to CoreLogic figures, apartments in North Ward, which is a sort of a downtown inner city area of Townsville where there's more apartment sales than houses, discounting was about 10%, which is considered to be a lot. That's a high level of discounting. But in complete contradiction of that, the median unit price in annual terms was up 31%. So one figure says prices are down, discounting 10%, but another figure from the same source says the median price has risen 31% in 12 months. So one figure says the market's weak and prices are weak, and the other statistic from the same source and the same row of figures says it's a boom market, prices are up 31%. And I don't believe either of those figures. Median price data and other data associated to it, particularly for apartments, for apartment markets, is often very, very misleading. You can't treat it as fact. You've got to be mindful that to a certain degree, they're all rubbery figures. Okay, that's it for now. Just summarising the main news of the day, the latest monthly report out from CoreLogic showing that in monthly terms and in annual terms, 5 of the 8 capital cities and regional Australia on average have rising prices. But the national average is a negative figure because of the negative influence of the 2 biggest cities, Sydney and Melbourne. That's it. Let's do it again soon. Terry Ryder signing off.